Hello traders, let's continue my wonderful threads about financial markets, and now I will cover in part stock market. I'm saying in part because of course there are too many stocks and too many ways how to evaluate stocks, so I wouldn't be saying that I would be able to do every of that in small YouTube videos. But let's start. In fact, it's quite easy to approach stock market because stock market of all markets has most objective approaches how to value them and how to look for them, because stocks are parts of companies and companies are legal entities which makes money. So if we understand how those entities make money, we have presumption of how should they be evaluated and how much they are worth. Of course it's a bit more complicated than that, but this is real. This is something real and something you could objectively touch, as opposed to currencies, cryptocurrencies or commodities, which have very subjective value, which is solely based on their supply and demand, which in many cases is impossible to verify. But here we could say, here's an Apple makes hardware in the form of mostly phones, but also as a tablets and support accessories for that, which they make which are hugely popular because they effectively sell wires and metals for hundreds of dollars. I respect them for that. And they have business of selling iOS software as well. Microsoft mostly sells software, but of course all those companies have umbrella of holding which has gazillions of sub companies which are spread into wide areas. Like Microsoft has, I think, Xbox and games and everything which you can imagine related to software, but that's known for the Microsoft Windows and Microsoft Office. So this is software as a service. Everyone who sells SaaS software as a service or SaaS startup probably would look as a Microsoft as pioneer in this area, because this is the definite software as a service. Google has umbrella of companies which you could know as a Google and YouTube. They make money mostly on ads. Amazon is marketplace for online retail sellers. So if you want to sell your fitness equipment, car parts and everything that you can imagine which is not straightly illegal, you could sell it on Amazon, and Amazon makes profit out of that. Tesla, I don't know how Tesla actually makes money. They supposedly sell cars and batteries, but in practice that's something phenomenal, and probably we could discuss Tesla as one of the recent business phenomena. Actually, it's not that phenomenal in the sense that every 5 or 10 years we have some exceptional company which tends to do something unorthodox. But how those companies how those companies are behaving in long term, that's another story. And this is next one is Berkshire Hathaway. That's investment holding which invests in everything, starting with insurance and ending with electrical grid. And actually I quite like its founder. It's not founder, he's owner, Warren Buffett, because if you are into financial markets you should follow that guy. And now it's I don't know, but I have to look in depth for their business model. But of course everyone knows Exxon. It basically extracts, refines, wholesales, transports and retails oil and oil products. One of the greatest, largest oil companies in the world. Johnson & Johnson is consumer goods, so they sell shampoos and things like that. We just sell credit cards. And by the way, I think you understand an idea that these tickers means that they represent share of companies which does something. They make money in some ways, and you could split their ways of making money by income statement, like revenue, net income, profit margins and every kind of financial metrics which are found on every company's home site or in financial news, where they have been doing great job and dissecting their financial metrics by their own, by how do you need them, for long term, for short term, for specific metrics on specific business niche, their profitability, their returns on capital, their debt situation, everything like that. So you could have very good understanding how company makes money easily. As you see, it was Berkshire here is Exxon. You could see, everyone could check out how ExxonMobil is making money, how they have behaved, how they have performed. Doesn't matter. We could write every company we could name. If it's large enough, we could see straight ahead how they make money. So we know what they do by visiting their websites and checking them on Google. We could do same and understand how they make their money, how they do business, how they make money. Once we understand that, we could have reasonable presumption how their stock price should look. And then once we have that, we could look at their stock prices. And in stock market, it's identical pattern as it is with all the stocks or another financial markets. You just have to understand how markets trend and go for that. But here I think a bit broader context is needed. I could tell you why. Because here's the thing. We have Apple stock. I have some trade examples actually here. That's good, because I have made some trading strategies out of Apple, because Apple was a good stock for traders. So when you have that business model and financial projection into place, you could do some more digging and understand how the stock has performed with overall stock index like Nasdaq or S&P 500 in respect with Apple, and how does that market have reacted to specific news. Because if forex, crypto and commodities are really living in the world of their own, with exception of niche commodities and very small currencies or cryptocurrencies, like if you could take main markets, they are mostly living their own nature, and they are not independent by one-off events. Doesn't matter whether it's oil, gold, euro against dollar or Bitcoin. They are basically influenced by market participants solely. But for stocks it's different, because stocks are largely influenced by their own performance. So you have to take that into consideration much more than with other commodities and currencies. That's why I'm selling you that. I'm giving you a bit more context here, so you could do your own little analysis and understand how they have behaved, as I told you, in respect to their financial situation and overall markets, and make some valid conclusions whether you should trade or invest in them or not. What I could say is that you have to look for good stocks, because stocks have tendency. Here's the thing: most stocks actually doesn't perform that well, and they cannot beat markets. So you are better off if you are just putting your money inside S&P 500 rather than trade on your own. And that same goes both to investing and trading, because S&P 500 index or Nasdaq index is comprised of relatively good performing companies, so it will rise historically. It will make trends and money making opportunities. But if you are investing in worthless stock, you could be wasting your time and your money for years, and they could do nothing. So that's why I'm giving you this context. That is why important to understand. But if we take huge company like Apple, we could see that we basically could trade it very well. I think it trades even better than Nasdaq index, because it went from $27 to $175, for instance, easily. And something like Tesla, which is not my favorite company at all, but it's a spectacular company if you want to trade it. So you see, I have subjective views about its business model, but it's great for trading. So my personal opinion means nothing. There's the same pattern. It was very hyped, very popular company, and it reflected in the share prices, which gave you huge money making opportunities. But I will talk about individual stocks later. I just show you the point that if you want to trade stocks, you have to do some sort of background check to some stocks, whether you understand what actually you are trading, what are financials, and whether it's actually worthwhile to trade. Once you have that in place, then you could use the same trading approaches that you are using if you are trading cryptocurrencies, commodities, stocks, forex, stock indices. Doesn't matter, approach is identical, but for stocks you need background checks, and secondly, stocks are much more harder to short because they tend to fall like a cliff. They don't have that supply demand curve as it is with currencies and commodities. They just simply fall as a rock, and you cannot actually capture those moves, or it's very difficult to do that. So that's that, and in next videos I will show you some of the profit examples on hottest stocks. I know this would be a bit skewed, but I will show you the point how good stocks are performing and how bad stocks are performing, and then we will see whether it's worthwhile to trade individual stocks as opposed to broader indexes. So if you want to understand that, make sure you are following me and stay tuned for my videos. Bye.